Well, good morning, everyone.
Morning.
Thanks for coming along to see me. I hope sort of like we can have an interesting conversation. What I thought I'd do is I'll just give you some of my general thoughts about where we are in these markets at the moment, and then let's just kind of have more of a conversation. I mean, I'm going to rotate through some of the metals and look at them a bit more specifically. But I mean, if you want my overview right now, the landscape for our markets is not particularly positive. I think strong impression that global growth is slowing. It's slowing in our country, it's slowing in the European Union, but particularly it's slowing in China, because it's always about China for us, isn't it? Right, so January and February, 2 months of falling purchasing managers indices for the manufacturing sector. What does that mean? It just means that Chinese manufacturing has started the year contracting. It's never very good for metal prices when this happens. This is the biggest user, right? The question then only becomes is, well, how long and how bad is this going to be? The good news is we all kind of know that Beijing has already sort of like seen the dangers of slowdown, right? And it's got its new stimulus packages kind of like already sort of like traveling down the various routes of the Chinese banking system. How long will it take to work? And how metals intensive it will be, we will find out. But there's another, of course, like really big elephant in the room here called Mr. Trump, right? So this is where the trade negotiations kick in. Imagine that you're in Beijing at the moment, right? You've seen sort of like, your manufacturing sort of like starting to sort of like really sort of like turn down very seriously. You've seen the economy starting to turn down very seriously. You've done what you've done, right? Which is unleash a bit of I call it a mini stimulus package. If the trade talks don't go well, that is going to make your job as a Beijing official trying to re-stimulate your economy all that much more difficult. If a deal is done, the opposite. It will act as an accelerator for the stimulus program. So that's why we are all a little bit dependent on, will there be a deal or no deal? If you want my personal view on that one, I think there will be a deal. I think it's going to be a bit of a symbolic deal. I think it's going to be a deal good enough to generate some positive headlines for Mr. Trump. I'm very skeptical as to whether it's going to be what I call a fundamental deal between these two countries. All right. So that for me is the big sort of like unknown across all the markets that you guys are trading. Is China's slowing. The Chinese authorities have already responded to that, but how long will it take for that to actually materially change manufacturing activity and change speculators' perception in China? Just get the impression that the Chinese are not very bullish about their own economy at the moment, and I completely get that. So it could be, if you want to take a bull case scenario, maybe 3 or 4 months of slowdown, and then that stimulus package starts to kick in. If you want to take a more bearish scenario, it takes longer to kick in anyway, and then it's knocked back by a negative outcome in the trade talks, in which case you could have a bit of a demand issue all the way through this year. So that, for me, is the overriding landscape at the moment. It's not necessarily positive, and you can see this. I mean, this is why copper's stuck, right? There's enough bullish commentators out there from the big banks trying to sort of get it going. But I mean, it strikes me that the bigger funds are just going, well, hold on, until China starts showing some positive signs, are we going to go long copper at this stage? We might get a better buying opportunity. So I think this kind of this, as I said, this macro softness, we call it softness at the moment, is actively restraining outright 3-month prices pretty much across the board. And I think some funds have dipped back into the water, but I think there's, for everyone that has, there's about 2 other ones who are just going, you know what, we're not so sure about metals at the moment. And you can understand it from their point of view. The indicators aren't good. You've got the China thing coming in. If you're a big portfolio manager, is there other stuff that other areas you should be putting your money into at the moment? I just don't get the impression that there is a buy-in from the investment community on the upside at the moment. I think it's waiting. I think it wants to. But until sort of you get some sort of more clarity about what's going to happen in China and how do the trade talks play into that, I think it's going to be difficult for a lot of these metals to really push what we call build sustainable rallies on the upside. Even though as we go through some of the messages, I could give you some very bullish arguments about why they should, but that sort of macro negativity is, for me, is still like, weighing on the whole complex. Yeah. Okay, shall we? I'll take some questions. Anyone want to talk about anything specific?
Well, we were talking about the copper space.
Copper. And I was saying to Shan, so I met a guy last week. I should call him, at this moment, a minor punter in the copper market. He was quite a big punter a year ago. And the way he expressed it to me is he said, I am bullish copper. I am bullish 6 months. I am bullish 12 months. And in fact, I get more bullish the further forward you go. But he said, I don't think the price is going to go out of its current range. Let's call it 6.4, 6.5 on the upside, yeah? He said, I just don't see the funds willing to participate. I don't think the macro environment is good enough. He said, how do I express my bullish view? He said, I'm going to borrow the spreads because I think that's where the tension is going to be. And I suspect that he is not alone in thinking of copper in terms of that sort of like spread play. Now, I know we saw it really sort of flex out, wasn't it, 2 days ago? You guys probably know more about the nitty-gritty of that than I do. My perception was there was kind of a bit of a collision of long and shorts there. I think there were 3 sort of like dominant longs showing up at the end of last week. The interesting thing is, though, when you push the backwardation, as we were saying, how much metal is there to be delivered to the LME? Because a lot of these banks that have been coming out with their pretty bullish prognosis over the last couple of weeks, all of them have sort of mentioned stocks are low, visible stocks are low. I know we saw the jump in Shanghai stocks last week, but you look at the historical patterns, that's absolutely normal for this time of year. If anything, more should have come in over the Chinese New Year. So, as I said, a lot of these analysts have been pushing this. Yes, stocks are low, COMEX stocks are disappearing. Is this a genuine bullish reflection of the underlying market? Whereas the usual fun and games for stocks going on, a bit of both obviously. LME backwardation will test their thesis. It's not hard to imagine a scenario that if someone did dump 100,000 tons of copper stocks onto the market, say over the space of a week, that would knock the wind out of the bull sails, I think, of some of these the analysts. I don't know. It's one of those things. The market's going to test availability, and let's find out what happens. Certainly, in outright terms, headline terms, stocks are low. Right? LME stocks are low. Shanghai stocks are low and have not rebuilt as much as I would expect around this time of the year. And CME stocks are disappearing every day off the board. And I noticed that Citi, which is one of the more bullish voices out there, put out a bit of research yesterday arguing that although there's been some arbitrage play of CME to LME stocks, they feel that most of the stuff that's left of the CME warehouse has gone to consumers. Again, that's their thesis. And maybe they're right. But I think the LME backwardation is going to be a really interesting test of that thesis. We'll see, right? I don't know how much could come in. I do know that probably a lot of what might have come in is now sitting in China, because the Chinese import figures for refined metal were really strong. All the way through last year. So for me, it's the test of the markets coming up. But unless you see a significant rebuild in LME copper stocks, I would suggest that you're going to see a period of kind of like more volatile spreads. Possibly with more swings into backwardation. This makes sense, right? Unless someone delivers. There are significant deliveries onto warrant. We've all got used to this. I found it anomalous that on warrant stocks could be so low and the cash to threes could be in such comfortable contango. I thought that was an anomaly. So I think that anomaly is kind of like being it's been corrected now, and then we'll just see sort of like, as I said, the test of physical availability out there. Yeah. Agree? Disagree?
No, I agree.
Yeah. But I do think, we put the top of the range 6.4, 6.5.
Backwardation to test it though, not 2 days.
Agreed. But on current stock levels, and if the guy I was talking to last week is representative of what I call a more aggressive like copper play, there are several people going along the spreads to try and sort of like express their views in copper that way, then I can see sort of like, as I said, a period of like quite sustained backwardation. Yeah,
should be a telling time. So if we get 3 months of backwardation and no stock turns up, then
bang.
paints a picture for other people to take advantage of.
And that's it. You've tested market availability, and if none, let's say no significant tonnage. I mean, there's always going to be some tonnage we delivered in, right, to a backwardation. But if no significant tonnage turns up, you can see sentiment sort of like really pick up on that. I mean, as I said, the guys, I mean, I mentioned Citi, they're not the only people who put out quite bullish copper notes in the last couple of weeks. All of them have referenced what they regard as low visible stocks. So it's kind of like, okay, if you're all comfortable with that, the low physical stocks reflects what's going on in the underlying market, good. We're about to find out, right? But yeah, I completely agree. If nothing very much turns up, that could be very interesting sort of change in mood amongst investors, because it could also coincide with, say, a breakthrough in the trade talks, and then you've got everything in motion at the same time. On the other hand, someone wants to dump 100,000 tons of copper into enemy sheds in Asia or something, you could also see how everyone's going to go, oh, well, we were told there was no copper out there. You know what I mean?
So someone's testing water.
Yeah, and I think that's what's going to happen. I think that's what's going to happen. I think that's what we're seeing right now. Let's test it.
Working on zinc a couple of years ago. First person that actually tries it, no stock turns up, and then it creates opportunity for 3, 4, 5 other people to do it.
No, absolutely. So, I mean, for me, a really interesting test of the copper market towards the upper end of the range. Backwardation, let's see how the market responds to that. I think that's going to be a really, just for the psychology of the market. Do you know what I mean? How long have we been range trading? I mean, copper, a few months, right? I think the psychology wants to break that range, and I think it really wants to go up, but it just needs the data, if you like. I mean, the proof that it's right to think of it in those terms. I mean, I should give an honorary exception that there are bearish analysts out there as well. I know Barcap is calling for the price to break down from the range before it moves up. So, as I said, I mean, everyone's going to be watching the same metrics, and I think stocks are going to be one of the metrics because the banks have made it part of their argument, right?
And when the stock's been delivered, historically, in the last year or so, they've been cancelled quite quickly, in which case that takes out the power of the delivery.
That's true. I mean, and if you're going back a couple of years when copper stocks were nothing more than a zigzag line across the chart, right? I mean, my impression, and this is not something that we can sit down on paper and prove, that was kind of a feud between two of the market's bigger players, right? What one delivered, the other one was going to take off. I mean, and it got, as only the Greeks can do, it got quite personalised. I understood someone pinched someone else's sort of shipping clerk at the time. It just became a war of attrition between these two players, right? One was kind of expressing a bearish view, one a bullish view, but it was predicated in what's going on in the physical market, where they were also aggressively competing for sort of like premiums and all that. I don't get the impression that that feud has continued. Not least because one of the players in it may have other things on his mind at the moment. I think that's all we're going to say. We're certainly on the record. That was a very specific moment in time, and we've all seen it before when just two big guys just go head to head, and it becomes just a matter of honour, if you like. I don't think that's happening anymore. But you're right. I mean. There is always the possibility for it to be whipped around and turned around again.
You'd rather have the stock on.
Well, my starting point when I write about all these markets is there is always some stock out there, obviously, right? The LME is not the obvious place to. Yeah, and work in progress stock and just normal merchant stock as well. You can't be a merchant unless you're long, right? So there's always something out there. I mean, the question then becomes, it's like, how much is available for delivery? Yeah, and that's what we're going to test, right? It could be 100,000 tons easily, but really, is it available for enemy delivery, or does the owner of it have other reasons for keeping off the market and happily pays the backwardation? We don't know until it happens, almost. But yeah, certainly there's going to be other stocks out there. Probably. I mean, again, my impression is that maybe not as much in merchants' hands as there have been in previous years. And I'm not just talking about the big merchants, I mean, talking about the whole array of merchants. My impression is, again, based on what a conversation with a couple of guys, people who have got used to sort of like being in the merchanting business for copper and have been able to rely on getting annual contracts off Codelco. Kind of forms their core stock, nice CCC brand, you can play around with that. Neither of the guys got any allocation this year from Codelco at all. Codelco will say that's because they had such good demand for their product from their user base. It may also be a change of culture within Codelco, but certainly I can think of two individuals who would hold 50, 60,000 tonnes easily of Codelco stock. I mean, just as part of, don't have that this year. So that's creates a question mark about what Codelco's availability is going to be, because of course they have some smelter issues going on at the moment as they're refurbing all their smelters. Maybe that's just them being sensible and holding a bit back just in case they need it, right? So yeah, definitely some out there. I'm kind of a bit about, the market will tell us. You know, test the availability, let's see what actually turns up. And we'd all expect quite a lot to turn up, and going back to your point, but if it doesn't, then that's a very bullish signal, I think. Yeah, and we're going to find out. I guess it's not going to be done today or tomorrow. It's going to be over the next few weeks. We're going to find out, see whether the backwardation persists, and then see what the reaction of the physical market is to that backwardation. Yeah.
What do you see about producer costs impacting the price? I mean, where is that sort of nowadays? Is it?
Well, you know, the price is kind of at a level where I would say some of the smaller operators are already being pressured.
6,000 or?
Yeah, I mean, you know, you're not far away from real pain points on copper. I mean, if you took another big leg down, again for smaller operators, I think, you know, you're starting to really test cash flow generation. Bigger, longer term consideration now, actually, which is only something we're going to start considering now. What's the cost to Vale of decommissioning all of its dams and getting completely new sort of inspectorates all that in? It comes with a cost. It's going to have to do it. The whole industry, I suspect, is going to start looking very closely at the tailings dams it's built. You could also see sort of like, I mean, that's sucking a huge amount of cash flow out of, I mean, all the companies. I think, you know, Brumadinho was kind of, what should I say, a dam too far. It's a dam too far for the industry, for the shareholders of that industry, and you've seen sort of like some of the reaction that's kind of like followed on, right? I think right across the mining spectrum, I think doing nothing about dams is now no longer an option, right? I think Brazil said there's 88 they want to have decommissioned in the next 2 or 3 years. You know, if you took a global view of that, the mining industry is going to be spending a lot of money and a lot of time and a lot of management resource on its tailings dams over the next couple of years. That's actually probably quite bullish if you want it long term, because for every dollar they're spending on that is a dollar they're not expanding their portfolio. So that's the new, for me, that's a really interesting new dimension into this. If you want to get really dramatic about this story, what happens when some of the bigger investors of the mining sector say, no, we're out. Not until you clean up your act. We're just not investing in you. That's it. We're putting all the shares out. It's not far away from happening from some of these entities. So then you've got a mining industry which has not only got the physical cost of having to deal with the tailings stuff, it's completely become lost investor confidence, which of course is going to affect all sorts of company metrics, right? We're not quite there yet, but there's been some fairly ominous warning. If I was in the mining industry, I'd be paying attention to what some of these funds are saying, which is kind of like, you may make yourselves uninvestable as a group of mining companies. Think about that. I mean, they all rely on sort of like shareholder funds and sort of like, you know, to generate, yeah.
What's different about this company's asset compared to previous?
I would say the loss of life on this one. The negative PR, that is the same company which had one 3 years ago, is taking place. Therefore, you have a heightened sensitivity in Brazil about this issue already. So the media coverage in Brazil, as you can imagine, was kind of pretty ferocious about this issue, and the world's media has picked up on that as well. And also we saw the pictures, right, which are pretty shocking. I mean, I wrote something last week. Statistically, one of these dam failures, bad dam failures, is happening once a year, but quite often they're happening in places where there isn't so much media coverage, or they don't affect someone who's in a top mining company. It could be a small entity. There was one 3-4 years ago at the Mount Poly mine in Canada. Were you aware of that? No. The reason we weren't aware of that is, although if you were local you would have been aware of it because it was a really big dam failure as well, Mount Poly doesn't produce much copper. So from our point of view, to be blunt about it, so it just kind of like passed underneath the radar. Do you know what I mean? It didn't have any real big media. That no one was killed. There was a big inquiry into. I mean, it polluted all the rivers in Canada. But it was an environmental story, if you want. Yeah. Brumadinho is way more than an environmental story, right? And it has that added sort of bite because it's the same company that had the Samarco thing. Now, not for me to say, not for us to speculate as to whether Vale should have done better, should have done more, I don't know. That will all come out in time. But I think that was part of it within Brazil. It's kind of like, you've done this again? And it's even worse, loss of life. And then the rest of the world's media, I think, followed in on that, right? So for me, this is the one, as if they happen once a year, probably the only time that we as an industry ourselves have paid much attention was Samarco, the other iron ore, because it had a market impact, right? We don't tend to pay much attention to it if it's not moving the dial on like supply and demand. But I don't think that's going. I think the next one that happens, is going to have exactly the same level of media coverage. If you see what I mean. Now it's become part of the media coverage of our industry, and it's gone way beyond just the environmental aspect of it, because it becomes an investment story. It's in the FT at the moment. The FT wouldn't probably have written about tailings dam failures at Mount Poly 4 years ago, right? So that's what's changed. I think it's the media, and also the fact that to lose one is careless, to lose two, kind of, you can take some hard questions here about what's been going on, right? But one a year. They're happening at the space of one a year at the moment, and that's the other thing. I didn't know that until I started researching. Why was I researching it? Because Reuters said, well, we probably should do something about the Brumadinho thing, right? And now I work in this industry, and I didn't know they were happening about the space of one a year. And the guys who monitor this stuff saying, actually, there's going to be more of them, just because there's more dams, they're older, everyone's working their minds harder. So I think it's now on the global media agenda, and I think that's very bad news for some of the big mining companies, right? I mean, I take a slightly negative view of this. I mean, from what I've seen in the stats, another one is just a matter of time. Mining industry better hope it happens slightly later than sooner. Can you imagine another one next week, and how the world's media is going to jump on it? I mean, and then sort of just keeps on amplifying it, I mean, for the mining industry. But their biggest problem is image, yes, but it's actually investors saying, you know what? If you don't clean up your act, don't care whether you're BHP, Rio, whatever, we're out of your whole sector. And that's a longer term issue, I think.
While we're on environmental issues, more the smelting side in China, do you have any sort of view or predictions? Are these restraints on production seasonal, or do you think they're going to be ongoing?
Yeah, both.
I trade zinc, so I'm not talking about sort of the whole base complex as a whole, but
yeah, with zinc, my understanding, there's a very specific problem. I think the lead smelters have as well.
Is it just lead and zinc, though? Is this going to affect any of the?
Well, I mean, first off, the environmental clampdown, what it's called, crackdown in China, is not going to stop ever.
Yeah.
Right. When the president, the head of the Communist Party of China, stands up and says, "I will promise you blue skies over Beijing," he's going to deliver, right? I mean, and he has said it several times. This is not just a throw-in policy by Beijing. It has become a core policy of the Chinese government. So, and I think the first time around, when they went for the winter heating closures, we kind of everyone's kind of. I think it's happening all the time now, and I don't think there would be seasonal winter heating closures. Depending on what the smog alert is in a particular city, it will tell its factories to close down or not, right? So I think you're going to have this continuous low-level disruption, and that's across all the metals. Because, I mean, when you hit, if you're the city authorities and you hit, say, an orange smog alert, you have the list of all the companies you're going to be calling and telling them, I mean, it could be anything. But zinc's kind of interesting. My understanding on zinc is there's a very specific issue this year, which is about solid waste discharge. Which you know, you all know more about this than me, but I mean, they all produce, zinc smelters produce jarosite, and I think that comes under that solid waste discharge in China, and they have been told to either comply with the new code of that, or they're out of business. So I think one or two have already gone. I think a lot more are doing upgrades and trying to sort of get their, you know, make sure that they can hit that. I think it's the deadline is the end of this year. So you have to have your solid waste discharge as a zinc smelter. If you do not have it all tickety-boo, you will not be operating. And I think that's very specific to zinc, and I think it's very specific to this year. Does that fit in with what you're hearing though as well?
Zinc chat, I didn't know if it was more of a...
No, there's a very specific issue around jarosite and what they call solid waste emissions at smelters this year. The zinc smelters collectively, I understand, have a problem with it. But I mean, even, it doesn't matter what we're going to talk about here. I mean, whether it be aluminium, whether it be zinc, whether it be lead, the crackdown of environmental or the cleanup is not going to stop until he gets this blue skies over Beijing. That's a long campaign. It's going to take about 10 years. But I mean, I would suggest to you to not underestimate how central that policy is now to the way China runs and thinks about itself. It is not just a throw in. Like, we sometimes think of environmental policies as whatever, right? You know, it's not in China. As I said, they've staked a lot on this, and it will be delivered, I think.
Yeah, I feel like it was sort of brushed aside, and it's now become one of the big effects of...
You're seeing it in zinc, right? We're trying to work out like how much smelter capacity there is in China to deal with the concentrates. This is a really specific driver of the answer to that question. I mean, how many of them are struggling to meet environmental controls? How many sort of might have to close, right? I mean, I think you look at any specific metal at the moment, there is an environmental driver in China. Lead, yeah, I mean, it seems to be huge. I mean, reorganisation of the lead industry going on over there, you know, particularly the smaller secondary producers. Copper, you know, a ban on all forms of sort of copper scrap is being talked about now. I mean, that has implications as well, right? So no, I think this is ongoing. I think it's rolling, and I think outside of China, it's maybe something it's very easy to sort of play down. But the more I talk and the more I read about this issue, the more I think it's just a really core policy of the Chinese government now. You know, it's not just, oh, it would be nice to have clean air. It's kind of, we really do need to have clean air, because lots of people have started complaining about it all over the country.
It's more regionalised in terms of the authorities drop down and level down to the regions, saying, right, it's up to you guys now. That's the central policy, but it's the regions who have to, so they can have ongoing on and off.
Completely, and
rather than just like between October and March.
I think what you saw is kind of an evolution of policy. So when we started, which was kind of like not this winter, last winter, right? And the Chinese central government came out with a classic central government thing, which is right, 50%. You know, reductions, and if you can't meet that, we're just going to do it across the country. It generated a huge amount, as you can imagine, of argument right across the country. Because if I've got a state-of-the-art clean smelter, why am I having to close if he down the road? And imagine those arguments playing out right across every city, every town, and every region in China. So from a central point of view, it's kind of like, yeah, actually that was probably a bit of a blunt, you know, that was a sledgehammer really approach. That's not, we don't want to lose all that time again with all these arguments. Let's just make the regional governments responsible and answerable. All they have to do is, we don't care what you do, you just got to hit that level. That's all you have to do. But how you do it is up to you. And I think that's what you're seeing now. I mean, sort of like it is, you know, each region is coming up with its own thing. But when they hit those orange alerts or their red alerts on smog, that's when like the closures come. And that's just going to be, it doesn't have to be winter, it could be any time of year. And it's just low level disruption all the time. Yeah? I mean, the other dimension of this, going back to zinc, funnily enough, is how many zinc mines in China have been closed over the last 5 years? I have no idea, by the way. But anecdotally, lots of them, right? Why? Because they were kind of small operations, probably not environmentally very vigorous, and a lot of them have been closed. And we saw that when everyone was expecting, you know, when the zinc tightness was in the concentrates market, right, which is about a year or 2 years ago, everyone was kind of waiting for that Chinese response. It never came. All the small mines in the past who kind of like, you know, swung into and out of production, they've all gone, right? So that capacity has been taken out of the Chinese zinc mine market, and it's now the smelters' turn, yeah? So no, I just think this has become hardwired into all of our markets. It's hard because it's, you know, you can't really get an overview of what's happening, because it is being done at the regional level. It's been done by almost weekly, you know, level. I mean, okay, you have to close for a week, then you can reopen it. Trying to get an overview of what that means is really hard at the moment. But I think it's going to cap all Chinese metals production growth. I'm not saying that Chinese metals they can't produce more, but I just think you've lost something. Collectively, this environmental thing is you don't have, say, the power to increase production by 20%, which in previous years they could do on Chinese zinc. No, that's gone now. So, you know, you kind of maybe looking at a much more restrained production facility there, right? I mean, right across the board. It doesn't matter whether it's aluminium or copper, because everything comes under the environmental crackdown. I mean, when you start looking at some of the smaller metals, like, I don't know, silicon and manganese, I mean, these things have been supply chains in China, they've just been destroyed because obviously they had a lot of environmental issues. Tells you that if they have to destroy a supply chain, they will, if they see the benefit or environmental benefit of doing it, right? I mean, the other dimension, as I said, is scrap. You know, part of the cleanup is we're not going to like take any of the rest of the world scrapping. Why should we? You know, we don't need it anymore, and why are we the dumping ground? It's having big implications for both copper and aluminium. I mean, the US used to be the biggest shipper of aluminium scrap to the States. That trade to China, that trade has gone, as far as I can see. Just doesn't, no, it's disappeared. It could happen to copper. I mean, I think there's a real danger of that. So yeah, no, I think it's hard to get an overview of what's going on in China from that point of view, but I think it's one of the key defining features this year and next year and for the next few years, actually, the environmental crackdown.
You said a lot about this environmental crackdown on supply sides and mines and smelters. You know, it must be impacting downstream as well. So
yeah.
It's, you know, I guess you're talking about how it's going to constrain the supply side of things, but you know, there is disruption there.
Yeah, and that's even more difficult to try and quantify. I mean, I think one of the issues when everyone, again, not this winter, but the first winter of the winter cuts, everyone had their numbers that they were looking, particularly on aluminium, like how much was going to be lost, right? No one, because it's just too difficult, could work out what are the numbers then of all the construction sites being forcibly closed, and these guys, these die casters being forcibly closed. That's, you know, I think we saw that, I mean, actually it was down the entire chain. But, and I think that's happening in lead, for example. I think the battery makers are as equally under sort of like the scrutiny as are the secondary producers, which makes it really hard at any one time to understand, is this more of a supply problem or a demand problem? It's both all the time. But in terms of structure, you know, I mean, as I said, the zinc mine thing was really interesting. In every previous time of zinc mine tightness, Chinese producers had just swung in really fast and really aggressively, and it didn't happen last time. And that's a structural change. Do you know what I mean? That's kind of like, okay, something has gone out of your system. And again, we don't know, because it was all the smaller guys that no one counts, right? You could just see it by the impact. It wasn't there. Yeah. Are you bullish zinc?
This year, yeah.
Yeah.
Finals title, yeah. It's quite concentrate building.
Yeah, I mean, and again, that's a really interesting question of how much zinc is out there.
Refined, not a lot.
That's my impression as well. Less than there was, right? Less than there was. And that's another, what I said about copper and the backwardation, I think zinc is another classic example, right? You know, I mean, for so many years, I mean, we got so used to there being a large amount of available zinc in New Orleans. You know, you remember that time when all the funds would get super bullish about zinc and sort of send it on a charge, and someone just go, yeah, a couple of 100,000 tons there. That's kind of like, again, so I think it's part of the market psychology and zinc, but it's kind of like, the question is, what happens if it's not there? what changes your assumptions about this market if next time around there isn't a 200,000 tonnes this reappear miraculously in New Orleans? And I kind of, my vibe is that we're moving towards that kind of more interesting question. I'm with you. There's always going to be something out there. I don't get the impression as much as it used to be. There's not much that's turned up in the last month or so, has it? And China's been sucking in like there's no tomorrow. I mean, China imported a lot of refined zinc last year. And if you want to follow through your thesis, or a bullish thesis, if Chinese zinc smelting remains constrained as it is, right? Doesn't matter how much concentrates you can throw at that market, if they can't convert it, China is going to carry on importing refined zinc. This is one of the things I find ironic with the zinc story, right? It was so full of bullish anticipation for so many years that as soon as that sort of like story started actually becoming reality, everyone decided to sell it. But the first quarter of last year, it's gone, guys, you haven't even let this bull story play itself out fully, from concentrate tightness to refined metal tightness, because that's where we are at the moment, I think. And yeah, so we come back to the Chinese zinc thing. I think China's going to probably remain a net importer for a while, and that's going to like keep on testing availability in the rest of the world, right?
While we're on copper, quick, you've got an estimate of the Glencore's production cut in Congo. Do you have any more details? Because every article refers to the amount of staff they're cutting, but are they actually going to cut that much refining production?
The easy answer to your question is no, I don't have a number. But it's quite evident there's a lot of politics being played in the DRC, right? Because you saw another outfit come up there and say, oh, we're laying off people as well.
There's no actual production.
To do with tax?
It's to do with the license to operate. I mean, so the DRC is taking a pretty aggressive line with its mining sector. It's raised royalties, etc., etc. I think you're seeing pushback from some of the bigger, more aggressive mining companies. Say, if you're going to do this to us, this is what's going to happen. Is Glencore going to walk away from the DRC? No. No, not as long as he wants to be in the copper and the cobalt market. It's not going to walk away from it. Do you know what I mean?
It's just a clever way of putting a bullish headline out without actually cutting any production.
I kind of think probably the real message for what they're doing is the government of the DRC, and I think if it's bullish for the rest of us, then so be it. But I think the real message is, you can see they're not the only ones. Everyone's having sort of issues with both Zambia and DRC. They want more control of the revenues. They want to, and no one else. Of course, every mining company is going to resist that. So it is happening in Zambia as well, which put a tax on imports of non-processed minerals, which of course there's a lot of stuff moves over the border for like being smelted in Zambia from the DRC. I think some of that's been wound down as well at the moment. It is, I regard it as first and foremost politics within those countries. I do not know specifically. You're talking about the Mutanda operations, which is in the Wall Street Journal. It sounds to me like a lot of noise based on maybe not very much in terms of production cuts, but I mean, I will see whether any more information comes out. But it's been building for this has been building for about a year or 2 years, right? I mean, DRC in particular is taking a pretty aggressive approach to sort of what it thinks is its fair share of the mining boom, with one eye on cobalt, obviously, which is also just made a strategic mineral, which means it gets more tax share for that, and pushback from the miners, as you would always expect mining houses to do, right? How would you push back on that? One of the classic ways of saying, well, you're going to make me do this. You see, I'm just going to have to, my margins are gone. I'm going to have to lay off some of your guys. It's kind of normal, like mining politics a little bit, I would suggest. But we'll see. I mean, again, it comes at an interesting time. I mean, copper is also defined by refined metal bottlenecks. You've got the Indian smelters out. Chile's trying to retrofit its smelters. So in that context, yeah, it could be interesting, but I don't have any insight. I'm a little bit, you can tell I'm a little bit skeptical.
Yeah.
I'm a little bit skeptical. I think this is politics first and foremost, and metal markets second. That's kind of, until I find out more. That's kind of my way I'm looking at it.
Articles, not one of them was referred to any sort of tonnage.
Which tells you something interesting, right? Which which tells you something interesting. Because if there was going to be a tonnage impact, I would suggest that Glencore would be obliged to tell the stock market about it, which it has done in the past, right? Yeah. So it's kind of like, guys, you know, you should know this. I mean, it's a relevant piece of information to our share price. The fact that they haven't so far, I mean, it may come out, you know, is interesting, you know. And as I said, for now, until I read or hear anything different, I'm kind of, it's politics, and I'm not convinced that production, which wasn't always going to be lost, would not be lost. It's like what they did at Komoto. I mean, they took it offline for two years, right? Very bullish. They actually needed to do 2 years' work on those mines. So, you know, it's just they chose the timing of that. It may be, you know, every mine has its own sort of like a progress plan. If you know that you're going to take a 6 month sort of like a period of low grades and refurb, and you can make political capital out of that, you would, right? So I'm a little bit skeptical, and I think it's very interesting that Glencore hasn't said anything about its production profile. Because bear in mind, I mean, it's just last week it was giving its forecast for production this year. So you kind of think, well, hold on, if there was going to be a significant change to what you have just told investors last week, I'm kind of expecting under stock exchange rules, you should really let us know, right? And they haven't so far. Yeah?
There's sort of times where the Indian smelters not you know, having another setback effectively in their progress to restart. So if you're trying to keep the copper price above the 6,000 level, which you say now is near the tight area for some of the producers anyway, it's a timely announcement put that way, isn't it?
Yeah. It is. I mean, and look, I mean, no producer is ever going to sort of like ring up a paper which puts out a bullish interpretation of a bit of news, right? I'm just kind of thinking it feels a little bit lack of concrete. What's going on there? And look, I mean, Glencore's like huge copper producer. Like all copper producers, it will always try and talk the price up. Yeah, I mean, it's in their business, right? There's no point in being a copper producer unless you're bullish copper, right?
Copper concentrates. Do you see that being tight towards the end of this year? I spoke to a couple of people and they're kind of are in where it kind of tails off to the end of this year. Do you see that as well?
I mean, were they citing anything particular for saying that? I mean,
just in general. Just.
I mean, I mean, one of the strange things about the copper market last year was just how little disruption there was. Yeah. I mean, everyone got suckered by it. We all kind of thought it was going to be a massive disruption, and it didn't turn out that way, right? In fact, it was kind of one of the best years for copper production anyone can remember. Look at how much has been going into China, the concentrates, right? I mean, they have just been soaking this stuff up. So one of the first things I would say is I think the Chinese smelters are really well stocked. Yeah. I think they've had a year of rebuilding stocks. I mean, I think, yeah, they're in a very comfortable position at the moment. So even if there were a genuine sort of, shall we say, tightening of supply and availability towards the end of this year, doesn't matter. I don't think the Chinese would like blink about it. Thank you. We've had 2 great years of import. We can ride out what's happening. I mean, I think actually now, I think the key story from the concentrates point of view is the Grasberg mine in Freeport. That's the one that everyone's. But again, this is not an unexpected thing. They always were going to go underground, and they always said, look, when we change it from open pit to underground, we're going to have about a year or 2 year really low production. Again, in the smelter community, I can't imagine any big player going, oh man, we never saw that one coming, because you know it's been signalled well in advance. That would somehow be in the concentrates market, I would suggest, because it wasn't an unexpected outage at all. I mean, it's been, as I said, flagged for years almost that this was going to happen, right? Okay, now you have, I think right at the moment, they haven't got an export license again. So, I think we just kind of have to accept this is kind of like part of the Indonesian business a little bit, right? But again, going back to a starting point, it's been a fantastic year if you've been a smelter last year, and I cannot imagine anyone, particularly in China, running into this year short of concentrate. They're pretty long, and will just carry on absorbing it as it comes up. I think the other aspect of this, I think a lot of people expected Vedanta's Indian smelter to be back on by now. It's kind of looking more and more less likely, isn't it? You know.
And do you think that impacts the market too much? Because
Well, it probably already.
Concentrate gets shipped to-
The market has already
Yeah.
the market has already adjusted, right? I would suggest one of the reasons that China's concentrates imports were so strong last year was, okay, you're not using it. Yeah, absolutely. There's 400,000 tons worth of metal that we can take. It becomes a more interesting thing, I suspect, if you were in the merchanting game, because India's gone from being really quite comfortable in copper supply to having a big black hole in its physical book now. I guess if you're in the merchant game and you've got tonnage to move into India, it's a very good time. You're probably getting some very nice premiums there at the moment. So, India becomes sort of actually a little bit of a drag on copper availability in that, refined copper availability. But yeah, I can't see right at the moment any huge supply disruptions, but that's the nature of copper. After 1 year of none, and no one's even really talking about this yet, it's almost sod's law that's going to happen, isn't it? It's just that's the nature of copper, right? And one's already gone, right? A small one's already gone because Myra Falls up in Canada, which had been refurbished for the last 2 years. They're going to bring it back on spanking new. They just failed all their compliance tests with the Canadian authorities, so they've had to take it down again. Things like that are already sort of coming, it's going to be one of those years again, right?
No questions.
What about the alley market? Just as you mentioned, alley, anything you're seeing?
It's as dysfunctional as ever, isn't it? I love aluminium, Okay, it's sort of I don't really want to get into the enemy stock movements and all that, which again I think is its own story, right? If I were a fund manager with money to spare and I was allowed to take a 10-year view, Audi would be one of the ones I'd take a 10-year view of. It's an impossible market though, sort of in terms of narrative, right? Because we know most of the stock is off market. We can't count it. We don't see it unless you're in the business of financing. We don't. We have how many million tons do you think is off market? 10, 12. So the key metric, if you like, of this market, which is oversupply and these stocks, we can't see. That's the problem. If, however, I believe what I read from Crew, who I think are some of the best analysts out there, their view is that those stocks are falling quite aggressively at the moment. Now, obviously not to the point that anyone's noticed on the futures market, if you see what I mean, because we're still playing out shuffle the million tons between all of us, right? So it doesn't mean anything fundamentally. But one of the things that stayed with me, there's a guy called Greg Whitbecker at Crew, used to be at Alcoa, I think it was during LME week last year. And he was talking about great shocks to the aluminium system and all that. And he was asked, what will be the next big shock to the aluminium system? And he said, when people wake up in 2 years' time and realise that those off-market stocks are pretty much gone. He said, that will be the next great shock. Because again, last 10 years, we've all just lived with this reality. Who cares about aluminium? There's another 10, 20 million tonnes. Who knows? But if Crew's right, and they think that's coming down all the time, at some stage there will be a reaction. This year, probably not. They're not falling that aggressively either. 3 or 4 years' time becomes a really interesting scenario. I generally also believe that capacity expansion of smelters in China is pretty much done. Yeah, there's still a lot of excess capacity, but they're not going to build anymore. That's done. You can only build one now if I take one down. So again, another sort of premise for why aluminium is such a rubbish market, which the Chinese would just always build more smelters. I think that's stopped. I don't think they will just carry on building more smelters. What they've got now is what they've got. Doesn't mean they can't lift production, because there's still spare capacity in their system, but there's not going to be more capacity. No one's building smelters in the West. Demand is still like that. So at some stage you can think, okay, if the stocks are falling down, we're running deficit markets, and the biggest supplier in the last 20 years has stopped building. At some stage, there's got to be a price reaction. The question, don't ask me when though. So I predicate that if I was allowed to take a 10-year view, I'd take a 10-year view on that one, because how much lower in price is it going to go? But the problem is, as always, the real story is off-market stocks, and it's the one that no one can really see into. So we all get distracted by the past the million tonnes around the LME system, which can drive short-term sentiment, even though I think everyone should know by now that that's driven by warehouse mechanics as much as anything else, right? But you still see people referencing LME stock movements in research.
Then what about on the alumina side, feeding into the whole story?
Well, I mean, which feeds back into the tailings dam story. It looked like a shoe-in that, Alunorte was going to be given permission to sort of restart full capacity. We all knew it, right? Hydro's kind of like hinting really heavily, it's just give us a couple of weeks, guys. Maybe it's fine, but obviously it's a bad time to be trying to reactivate a big plant based on allegations about your tailings facilities in Brazil at the moment. I can just see that being pushed right back a little bit. We saw Chinese alumina exports kind of fill the gap last year. If they have to, they'll do again, I think. But again, that's a really interesting story in China, right? What's happening on the alumina side in China? That part of the supply chain has been hit really heavily by environmental inspections and bauxite in China. Again, it's really hard to see into that Chinese supply chain, but guys who I know sort of really spend a lot of time looking at say they've got a real problem. They've got a real problem with their own domestic bauxite now, because the Chinese government just gone, you're not using that stuff, Again, it's another pressure point. When I asked someone, I said, how much alumina is going to be affected this winter? He goes, it doesn't matter. They can't run any faster. They haven't got enough bauxite. They're just running on what they can at the moment. So alumina could be a bit spiky. The trigger will be Alunorte, because that's the one we can all monitor and we can all understand. We know what the tonnage is there. And I think every analyst out there at the start of this year would have penciled that in a full restart by the end of the first quarter. I'm not so sure anymore. Again, that's the knock-on effects of the Brazilian situation, right? So it could be a bit spikier than maybe we kind of thought even a couple of weeks ago. Looking forward to that alumina contract on the LME so we can all monitor it, right? Anyone got any views on tin?
Price?
Yeah?
I think it's done too much.
You really think it's done too much, yeah?
Yeah, it's done too much.
What do you think? Has there been investor buying in it? To push it out, or is it just?
There has been, but not loads and loads and loads. And they're doing the profit. They've started buying like 20k, I'd say. I think it just seems a bit overdone to me. Although I have heard that the Indonesian pushed back, is letting the other surveyor kind of go into it. Or whatever. So I still like the spreads. 20 back a month. I think the price has done too much. But I did think of that $400 ago, so.
Okay, just a little bit of a word of warning, if you like, but not necessarily right now. I'm sure some of you guys probably saw this. Did anyone here go to the ITA, the tin seminar just before Christmas? I'm sure someone was probably there. Anyway, they showed this slide, which kind of like, it's rare that you see a slide that kind of rocks the room, as it were. But they pinched the slide from Rio Tinto. I don't know how they got it. Rio Tinto had gone out and asked the US university, MIT, okay, we're in the metals business. All this stuff, EVs, the whole lot of it, tell us what the metals are going to be, right? And the answer was tin.
Yeah.
Do you see that, right?
Yeah, I see that.
And everyone kind of went, really?
It shocked the market.
Really? It's tin?
Yeah.
It shocked the ITA, I think, because they were asked about it. Said, well, we're doing a bit of research on the lithium-ion battery, but anyway, never underestimate the power of that.
Yeah, there was an article last week as well. Did you see that one?
Which was that? No.
That was 60,000.
Oh, right. That's right. Now you see, that's the sort of thing. There's a lot of funds out there who may be partially active in metals, as and when they can see a good story.
Yeah.
That's the sort of story.
Yeah.
That's going to go, oh, hold on. Let's go and find out about this market.
Yeah.
And I just want, like sometimes for me, like nickel, there's always now a little bit of an electric premium in that price. It depends when it's on its bull charge. Everyone's talking about electric vehicles, right? Then it's all like when it comes down again. Okay, well it's still there, but I think tin could start attracting that sort of thing. Now, I don't know whether it's big enough for some of these guys to really get involved in, who might want to get involved in.
I think it dropped out a couple of indexes.
Yeah.
In the last year or two.
But I think it's been put back on the radar by that one slide that the ITA pinched off Rio Tinto, right? And I was shocked by it. I was going, really? Okay. But the argument for that is, and they put out the thing about the electric vehicles, which is 60,000. Actually, if you go back to what MIT said, they said tin, EV's not such a big thing for tin, really enough. It's all the stuff that follows, all the AI, the Internet of Things, all going to use tin solder. And that's just going to be a continuous sort of like 20 year. So it just makes me, I was looking at the tin chart today, and I would probably tend to agree with you. It's kind of, really? But maybe it's got that little like electric tingle in it.
Yeah.
I could just tell because when I picked that up and wrote about it, a couple of the guys who wrote back to me on that one were kind of not tin players.
Right. Okay.
Yeah.
So
it's kind of, where would I get that research then? For that sort of like.
Tin goes under the radar.
Exactly.
No one really cares.
I think that's put tin on a radar. I don't think at the moment there's much money being sort of invested in it, because again, everyone's got to overcome that problem. It's like, how am I going to invest in this stuff, right?
Yeah.
But I'm just saying that going forward, you and I, maybe we should both get used to seeing tin a bit overvalued as to what we think it should be, because it's probably like put a tin on a broader radar in a way that it's not been there for years.
Tin, you can actually trade it as well. Whereas you've got the lithium stories, things like that, or the cobalt stories, for example. You cobbled up X amount of percent, but could you actually get on the back of it?
Yeah, but again, on tin, if I'm a bigger investor and I want to say buy 20, 30,000 of it, is the LME going to be an easy place for me to sort of like hold and run that position, right? Maybe.
You could have 1,000, 2,000.
Yeah. So, bear in mind, some of these guys want to take really big long-term calls. But based on usage, if tin's going to be the story, I want to take a 20-year view on that. You could do that in aluminium and copper through the market. It's trickier on it, but I think it's there. The more research that the Tin Association puts out like that, the more it's going to reinforce it. But it caught them unawares as well. Particularly that second component of the Internet of Things and all that. They haven't done that sort of research at all.
Because no one's really said that they were doing it until it was all published at the end.
Well, yeah, and I don't even know how an internal slide from Rio Tinto ended up in the public domain. Do you know what I mean? That was also kind of, but everyone got the same reaction I did. I went, oh, well, that's really interesting. Yeah, I've covered the lithium, cobalt, and all that from the point of view of the Internet of Things and the EV. I hadn't even thought of tin. And that's interesting. That's why I can just find it's got a little bit of more interest in it than it's probably had for quite a long time. And maybe there's a little bit of price inflation in there because of that.
Yeah.
Yeah.
I think it was that slide was more on the project side of Rio Tinto. They put it in when they had their Jafar project.
Right.
So
Okay.
presentation.
Yeah.
I think they were looking at metals. They didn't have copper on there. It was because they were already producing copper, so they were looking at metals that they weren't really active in, that they were trying to assess which ones we should be looking at.
Well, I suspect also because they're sitting on possibly one of the biggest but weirdest lithium deposits in the world, aren't they? You know this? It's only Rio's the sort of company that does this, right? They found this deposit in Serbia, which of a mineral that's so rare that it had to be named. And it's next to the town of Jadar, so it's called jadarite. And it's lithium based, right? But it's huge. Now, let alone whether anyone could there's no technology to process it, but I suspect also Rio were kind of thinking, well, we could be in the lithium game in quite a big way because of this slightly strange stuff that we found in Serbia a few years ago. So I kind of wonder whether that was something that's going on internally there. They spent a bit of money on the deposit in terms of delineating it, but it is mega. If European car makers were looking for a domestic source, that would probably be it, right? So I kind of wonder whether that was kind of going through their thoughts as well when they were kind of thinking, is this something we should spend the money developing the technology to make lithium carbonate at the end of it, or shall we just kind of like this, So maybe that was in the mix as well. yeah, they could become a very big jadarite producer.
What were you going to say about nickel stocks and Brexit? Nick said it was on the agenda, but...
Nickel stocks and Brexit.
Well,
Hold on.
This said out on the agenda saying China macro, copper spreads, nickel stocks, Brexit and macro. So I'm not sure. I don't know if there's anything in particular.
Well, nickel stocks. I mean, again, you know, my views have been kind of are out there really a little bit. You know, a lot of nickel's gone off the market. Okay, we'll get on the correlations. A lot of nickel's gone off the market. Do I believe that all of that has gone to end users? Absolutely not at all. Get an electric premium story. I met a guy in LME week. We were supposed to have a coffee and have a couple of beers. A German guy, and he just said to me, he said, "I am long nickel." I said, okay. He said, I'm long physical and I am long futures. I said, right, okay, well, what's your end game? He said, it will go higher over 10 years. EV, did it. And I said, are you really? He goes, absolutely. I am 100% convinced. And this guy's been around for a long time. He's got quite a lot of money behind him. He's just got to take. And I think there's a lot of people like that out there on nickel. Again, why? It's that EV story. You know? Now, I said to him, I said, look, I had quite an interesting argument. I said, I'm going to play devil's advocate. Here's the reasons you shouldn't be long nickel. But his conviction is kind of like, you know, was impressive. And there's a lot of guys who have that conviction. They'd be stocking up. He's probably sitting about 3,000 or 4,000 tons of physical as well. He's taking off market. There's enough guys doing that at the moment, right?
Slow burner.
Exactly, it's a slow burner. And like, if you've all kind of gone too far ahead of this curve, which I think you have all collectively, right? The short-term disappointment is surely the only outcome that's going to happen here, right?
Probably a lot of people that are sitting long, but not a lot of people that are going to actually push the price up.
Yeah, and that's it. I mean,
you respect long, but you need funds to actually participate in.
Yeah. So you know, you got that. So the market's gone sort of semi-bullish, I suspect, before it should have gone semi-bullish, and we'll see how that one pans out. It all comes down to whether the Chinese can sort of, you know, create the right form of nickel from their new projects in Indonesia, in which case who cares about the nickel story, right? Because there's enough Indonesian ore to supply everyone. It's one of those stories I think is really technology dependent, so you know, we'll see. But yeah, I'm sceptical. I mean, nickel, there's still a lot of nickel around in my opinion. There's a lot on the LME and there's a lot off the LME, and it's actually held, I suspect, by speculators more than anyone else. Guys like this German I met, yes, I'm going to hold it forever. Really? Okay. It's going to go back to 50,000. Really? Oh, okay. But you know, as I said, he has his conviction, but it is a conviction, and I was surprised by how strongly he felt about it. I said, what if it goes back down to be like 10? I will buy more. You know, he's so convinced, but a lot of guys are. You know, if you can take that view, 5 to 10 years, nickel's kind of, it's a screaming buy, you're being told, right? So that for me is kind of the underlying nickel story. I think they've all gone a bit to it. You can see it. Occasionally it comes back and everyone throws in the towel again, you know.
Everyone did that with copper initially with the EV story, and they realised it wasn't going to be till early 20s.
It's such a small percent still, isn't it?
Yeah, but you know, look, markets and investors in markets trade-off stories. I mean, I know they've all got their quants and all that, right? But everyone loves a great story. We're still human investors, yeah? I mean, and the EV story is a great story. I have actually no doubt in my mind that the electric vehicle revolution will happen, and will happen sooner than even we expected to happen. But the flow through into it's going to transform the nickel market. It's going to, lots of things have to happen there in terms of technology, battery chemistry. You know, it's not just a simple, you know, for me, sort of like flow through, but it's supercharged. It's put a little charge underneath some of these metals. Nickel definitely, tin possibly, maybe. We'll see how that, you know. And Brexit, I don't really have any views relevant to the metal markets on it, to be honest with you. I'm sure I could bore you endlessly about it. No, but to sum up my views on Brexit, as I said to my wife when we were talking about it originally, I said, don't mess around with complex systems like your economy. That's just it. That's all I have to say. It never goes well, you know. Never redesign a nuclear power station because you can get a bit of extra sort of like oomph out of it, you know. It's complex systems always generate unknown outcomes. So.
I mean, if last year was impacted, the market's impacted by interest rates really. As one of the stories with tariffs and interest rates impacting the metals in terms of, you look back into those things really move the markets. So for 19, what's the left field out there? If they're not going to change interest rates, that's kind of out of the way. Is it oil price? Is it the fact that our metals could go more backwardation than people have been used to, who've only been trading for the last few years and haven't really seen these big moves, and that could then generate some interest? What's the sort of left field kind of thing?
I mean, well,
Tariffs are still got to be number one.
yeah, I was going to say trade talks and tariffs, whether we like it or not, I think are short-term determinants of sentiment. I mean, if you were to get, in my opinion, a really good sort of like outcome of the trade talks before whatever the March deadline, I think you would see sympathy sort of move into metals. I mean, it'd just be one of those things. Okay, why have we not invested in this sector? That's why. Okay, I think it's quite a short-term thing that. In terms, and I think interest rate cycles are pretty much done, right? So that's out of the question. I think the dollar is probably as unpredictable as ever, but maybe, we've seen the peak of strength there, it would all make sense. The outlier...
is oil more, because Venezuela, their oil was feeding the southern US refineries, and obviously that's why Trump's obviously really wants to get involved there, as much as anything else. If they want to cut back oil, that does impact Ali, that does impact, the base price of metals, impacts the dollar, Is oil the story?
I could see that. I mean, quite often, if you get a really strong oil rally, guys are sort of like who invest into the energy sector then take a second look quite often into other parts of the commodity complex. So if I'm bullish oil, what else should I be bullish here? Like, so aluminium would be a case in point. I don't know how sustainable that oil rally is if we accept that the world economy is starting to slow a little bit. I mean, there's very specific supply, kickers in there, right? Some follow through, but I think it's a little bit that. I mean, the outlier for me is global recession this year at the manufacturing base. In which case, forget the upside. I mean, if things go wrong in China, if you don't get the trade deal, if they kind of do not stimulate their manufacturing economy in the way that metals markets are anticipating, because bear in mind, this is not just about building lots of motorways anymore. They've done that. They're not going to. It will be less metal intensive. If Europe slips into recession and if the US slows aggressively, that is probably like the thing that, that's not a bullish one.
I think it'll be classed as an actual positive outcome to the tariffs. Keeping them at 10% and not raising them to 25%.
Positive. I mean, I think if you kind of look at what the United States negotiating position is, it kind of covers everything about China, right? Mm-hmm. Down to we don't like the way, by the way, you kind of cross-subsidise your aluminium production sector. We don't want you to do that anymore. It's kind of like, well, that's a neoliberal economy telling a state-planned economy, why don't you just dismantle your system? It's not going to happen, right? You would never accept it saying, the way you've been doing this in the UK, now you've got to do the whole thing differently. No, we're not. So the US has got to understand what's achievable. Because if you're going to ask the Chinese to stop running a centrally planned economy, how can they? It's the very nature of the system that they operate, right? It's worked for them. Why would they dismantle it? So at that level, if the US is seriously looking for concessions there, it's not going to get it. If it will accept a bunch of trade concessions, I think the Chinese will deal any day. Yeah? They want loosening of intellectual property rights. They want China to buy more soy meal. I think that's dead easy. I suspect that the US is caught between a soft negotiating position and a hard negotiating position. It knows what it wants, but it may be realising that, certainly not before March are you going to get the sort of concessions that you've been asking the Chinese to make, because you're asking them to upend their entire system, right? It's not going to happen. So I suspect that anything which is not an outright escalation, bitter breakdown of talks, is going to be viewed positively by the markets, right? But what I also think is, I suspect that the deal, whenever it comes and whatever, it's going to be a bit cosmetic. It's going to be a bit light. Once you start peeling into it, you're going to realise that, I mean, there's probably not as much substance there as, and then you might get a second reaction from markets. Yeah, it's a deal, and it's gone. Oh, not what, you know. I do take a view that, I mean, relations between the United States and China have just fundamentally changed, and this is just one manifestation of it. I think that, I mean, you know, from expecting Chinese liberalisation of its economy, the US generally believed that that would change the way that the Chinese state operates. That's not happened, and I think you're seeing a reaction from the United States accordingly. It's interesting that, I mean, the US formally lodged a complaint with the WTO alleging all this stuff about aluminium subsidies, manipulation of the currency. It did so under the Obama administration. It's one of the last things he did in office was throw in this huge complaint about everything, about the way the Chinese run their aluminium thing. So it's not just Trump. It's been building for a while, this, right? And if Trump were to sort of like fall under a bus tomorrow, I don't think US policy towards China becomes less aggressive. Yeah, maybe a little bit in terms of the way Trump talks about it, but I think, you know, I mean, you've got to expect that there's going to be an underlying sort of a low-level conflict at the trade level between these two countries for the foreseeable future. Partly because, again, what the US wants China to do is not deliverable. It would be like China saying to the US, you know, you should get rid of all this government thing you've got there. And the US would go, no, that's the way we operate our society. Some of what they're asking China to do works at the same fundamental principle, and I don't think it's achievable. But, you know, short-term, anything. I think the markets will take any deal. Any deal that's announced as a deal.
1st of March is the deadline, isn't it?
Was it the end of March? First. But again, I noticed Trump overnight was saying, oh, maybe we don't stick to the deadlines, so, you know, maybe we push it back a little bit. And that's the other problem, right? We're trying to sort of like determine a complex set of negotiations through someone's Twitter account.
We've all got Trump on our Bloomberg now. It's tweets.
I started doing it about it when he first came in, and then I've just taken it off my. No, I can't. I haven't got. It doesn't enlighten me following.
Doesn't really.
Well, you guys got to trade off what he says, right? But I don't have to trade off it. You know, I'm there to sort of try and do an analysis of the markets. So. Yeah, he is not a good sort of like signal for me as to what's going on in those talks. Put it that way. But, you know, I say anything which is not a disaster and a walk out the room by both sides, I think will be taken well by the markets at this stage. And yet, keeping where we are, I think will also be taken as a good thing at this stage. But yeah, if a deal is announced, yeah, the devil will very much be in the detail, right?
Mm-hmm.
Yeah. Yeah.
Thank you very much.
Okay. Any other questions? So what's the house view then of the metals? Are you bullish? You bearish? You stuck where you are?
All eyes on trade talks.
Yeah, all out range bound for me.
Yeah. Are you expecting a positive outcome from the trade talks, and do you think that's going to be positive for prices?
I think it'll be positive for prices eventually.
Yeah.
I think the micro outlook is bullish, but we're outweighed by sentiment at the moment. So.
Yeah. I agree.
I think Europe's actually more of a worry probably than we're actually taking, because we're looking at Brexit and stuff, you know, our own local impact. Just then keep an eye on Americans in terms of trade, but actually Europe's got fundamental problems. They can't change interest rates. They've got no movement to boost their economy at all. And you know, if there's general consumer downturn, even a little bit, it's immediately impacting Europe very quickly. And therefore, you know, China's not going to be selling as much. And ultimately, sadly, it might not be very good for us as it prices. You know.
No, I agree. I mean, you know, you can visibly sort of vibe the whole European economy slowing, like, I mean, breaking at the moment, can't you?
We've got no room to move because the US can reduce rates. Even in the UK, we can do a little tinkering, and especially post Brexit, we can massively boost our economy if we want to, you know, by changing VAT and tax regimes. But Europe, they're just stuck. You know, they can't. What else can they do? They're already zero.
Well, I mean, they could quantitative ease again, I suppose.
Long term.
Yeah. I mean, I know, and this is the danger. This is kind of my bear case scenario.
As well.
Is when you've got Europe already sort of like breaking sharply, China breaking sharply, and we hope can pull out of that. Even the US economy has got some one or two little warning signs flashing at the moment. You know, it's not unbelievable scenario that we have a very bad sort of like, growth scenario or recession scenario later this year. I don't think most people would have it as their base case, but I think as we go on, I think you've got to become you've got to keep an eye on that outcome, because everyone in this room, I suspect, kind of thinks the price should go up because of the micro, right? And I kind of I'm a bit like that as well, right? But I mean, actually, the real outlier may be, you know what, when things deteriorate on the macro so much that the funds do come back, and they come back the way we don't want them to come back, which is go aggressively short, both in China and outside of China. So yeah, I mean, and that European weakness makes me nervous as well, because it's not, if it would be easily contaminated further by weakness either in the States or in China, and you could easily sort of like design a domino scenario, right? So I think that's one of the things that makes me nervous at the moment.
There's too many question marks. I said there's probably not going to be a global recession, but really these headlines like the banks are upping the chance from 10% to 20%, things like that.
Yeah.
We've got Chinese, the days are gone of China growing double-digit figures every year.
And that's it, although remember, even it's now so big that even, single-digit growth, from my metals point of view, means they're going to be continue buying metals. But again, that's what makes me nervous about China is metal prices, you go back in time, when Chinese manufacturing contracts, metal prices don't tend to do very much, right? Because it's still so linked into this big buyer, right? 2 months of negative readings. If you ask me again in like 2 months, and there's another sort of 4 months of consecutive negative readings in China, I'll be getting really nervous about like recession at that stage. We're expecting it to sort of accelerate out again, but I mean, it remains to be seen. Yeah.
I'm sure we read the other day that China's growth is 20-year low, 10 points.
Possibly, but I mean, then we're going to have a conversation about which figures we're using for Chinese growth, right? You see the headline figures for GDP, okay, leave them to one side. I like the purchasing managers indices because one's state run, one's private run, but I like the way they kind of like give me an overview there. And they are both in negative territory. The other thing I kind of tend to look at is what they call the total social spending figure, which for me, I mean, this is not an economic term, total social spending is just how much money has Beijing thrown into the entire system over any 1 month, and that's going up at the moment. So that's what we'd expect to see, right? They've announced a stimulus.
Figure for that, or do you combine?
No. It's they released their own figure, called it total social finance, I think it is.
They released that month.
Yeah. You'll find it on Icon. I don't know. It's a tricky one to find. So yeah, I mean, that's just kind of the broadest scope of like basically how much money has Beijing thrown at the system or taken out of the system, and that's going up, as we'd expect. That's the stimulus. That's the money flying through the channels, right?
Across all
everything. That's why I say it's total social. It's just everything, right? It's one of those catch-all things, but therefore it's quite useful. I mean, it's a crude thing, but I mean, it gives you some view of like, I mean, are they stimulating or are they not? At the moment, it's rising. They're pushing money through the system. Again, like how successful it will be, we'll find out, because it's not going to be, it's a lot of diminishing returns, right? The biggest stimulus program was 2009, 2010, when frankly China lifted itself and the world out of like manufacturing meltdown. Second one was about 15, 16, when again they kind of try to clean up all the excess liquidity of the original one, overhit the brakes, and again we had that's where copper bottomed out, right? 2016. This is the third one. They've understood there's no point just kind of like just building more stuff, because then you spend the next 5 years sort of like cleaning out all the rubbish debts that went with it. So each one's the law of diminishing returns. This will be the weakest from a metals point of view. The other two.
It's actually been trending.
Well, it's just this is the third time they've done it, right?
But is there, compared to the last two scenarios, how far are we into that cycle?
Well, they started really sort of like pulling out the levers at the end of last year. So that total social finance measure, as you would expect, that's money like being pumped into the system, and that started moving up. So we're in the process. We're in the process.
Q4 last year that started.
Yeah. So all other things being equal, which they never are, you would expect that, and I think most analysts are expecting that to have a material impact positively on, say, metal prices Q2, Q3. The question is, though, hold on, but they haven't committed to as much infrastructure build. They're not going to build just. So how metallically intensive will that be this time out? There's a lot of anecdotal evidence that they're trying to push it down more consumer channels. So yeah, okay, so a guy buys a washing machine, it's good for metals, but it's not like building a new sort of town somewhere in terms of being good for metals, right? So that's the other thing that was always going to happen, is like, might take a bit longer and might be less impressive from a metals point of view this time, and then you've got the trade talks kicking. That can either break the whole process or accelerate the whole process, in my opinion. And that's where we're always back with Mr. Trump, right? Yeah. We're still trying to work out how that impacts in on what I think is quite a delicately balanced economy at the moment, yeah?
There's a lot of the manufacturing in China has been a bit of a trend last year linked to the tariffs, this acceleration of manufacturing out of China into Southeast Asia, like places like Vietnam. Where do you see that as a trend? I mean, if that's accelerating, you expect that to be offsetting?
Well, it's actually working both ways. I think there's a story overnight I saw about the US ports jamming up, because all the US importers, of course, are trying to get in as much Chinese goods as they can, just in case. So it's important to say it's a two-way thing that's going. The whole world is stocking up, if you like, just in case it becomes a full tariffs war, right? Inevitably, I mean, that, shall we say, that front running of your own order book is not sustainable. There will be a reaction to it, always. I mean, and both in the States and, so you may look at some of the trade figures for China. It's quite obvious they are being inflated by trade tariff considerations.
Do you think a lot of the metals going over there for that reason, or is not related?
Indirectly, I would say. I mean, again, I don't know what you pick up. Someone suggested to me that it's quite hard to sell American metal products of any sort into China at the moment, because there is kind of like, there's a broader nervousness, if you like, particularly among state-owned companies, about being seen to do the right thing, given the standoff. So at one level, I'm kind of a little bit skeptical that everyone's rushing to get in, say, US lead construct, whatever it is. But at another level, definitely, I mean, because, if no copper scrap is going into China at all, there must be a flow through into how much refined metal you need. That's partly trade, partly China's own environmental policies, right? But it's partly trade. They tax aluminium scrap, because as a retaliation to the US. So that scrap dimension, the scrap dimension, I think, could last quite a long time. And there are people, I think, stocking up on material because they just don't know what's going to happen to scrap. I mean, they're talking about eliminating all copper scrap imports next year. All of it.
Yeah. But China actually produces, last year, on the copper side, I think they're seeing a much greater increase in domestically produced copper scrap, into the millions of tonnes in the next year or two, which is going to naturally offset whether
it's the time of disconnect before. I mean, and I think that's one of the reasons they're doing it. By the way, they want to actually, they want to go green. I mean, they want to have a recycling economy. It will take them a little while to get there, and it's what happens. If you cut off the imports too quickly.
A little bit of the gap that they're not getting importing from the US.
But I mean, I think, but I do think, I mean, part of the strength of refined copper imports has been, if you're in a scrap supply chain, or part of the supply chain with scrap impacts, it's all very well us as analysts going, well, we've done all the calculations and the purity of the scrap's going up, and therefore it shouldn't really. If you're in the supply chain, you're not going to risk it. But your guy goes, I may not have any sort of scrap for you next month. Okay, what am I going to do? I'm going to have to go. I can't just leave myself open to that. So I think the disruption effect has been very significant. And I think it's normal that, people would have a bit extra stock of another form at that stage. Now, it's as you said, in 5 years' time we won't be talking about this, because I have no doubt the Chinese will have really lifted their own scrap production and refining. But in the interim, I think it's massively. I think it's really disruptive on lead, for example, in China. I mean, my understanding is a lot of smaller lead, secondary lead producers have just been told to close. They do not conform with where China wants to go. They want to have bigger, cleaner, recycled lead operators. And that's fine when you get there. It's the period leading up to getting there that becomes the disruptor. Yeah.
And the amount of cars they sell, they should have millions of batteries for domestic secondary lead production.
Well, you know, it's something if I want to write about lead, I've got to do a bit of research on the battery side. I mean, I think if you kind of listen to the Lead Association over here, they'll tell you about our recycling rate of lead batteries. It's 99% or something like that. Always leaves me wondering, what happened to the other 1%? Their own figure, their figure for China is something about 40%. It's going, what the hell are you doing with 60% of your lead? Are you dumping them? Is it just disappearing from the system into illegal sort of recyclers? I don't know, but I mean, it's madness. I mean, if you are generally only recycling less than half of your lead batteries, you have a big problem. I understand why you're cleaning up the whole thing now, right? I mean, so that tells you there is, if they can get themselves sorted, say in lead, massive potential increase in sort of secondary. But getting there could take a little while, right? Okay.
Cool. Thanks a lot.
Thank you very much.
Well, hope you found it some interesting thoughts there.
Very helpful.